Welcome back to Open Exchange. Now, a drop in global commodity prices is affecting the East African community as much as the rest of the world. This combined with a longer than usual rainy period, which has hurt tea and coffee crops. Joining us now to discuss current trends in the East African commodity space are Jeffrey Mudzik from Structured Trade and Commodities Finance at Standard Bank, Elizabeth Stevens, Head of Credit and Political Risk Analysis at JLT Specialty, and Ravinda Sikand, Director of Deloitte Limited. Thank you so much, everyone, for making the time to join us. Now, in addition to the Egyptian crisis, the Syrian crisis, and the Eurozone crisis, which have all contributed to the collapse in demand for commodities in the region, we've also seen a general downward trend in terms of commodities. So, Elizabeth, let me pose this question to you first. Is a commodities exchange the best response to a falling commodity prices for the region?
I think there are some advantages to commodity exchange to counteract falling prices in the region. But I think it won't absolve the problems of fluctuating commodity prices internationally. What I think we'll actually see in the future, particularly in the agricultural sector, is a significant upturn in demand from the Gulf states. We're already seeing a number of states like Saudi Arabia and the UAE looking to invest and in some cases buy millions of hectares of land in Southeast Africa in countries to develop their own agricultural production. And I actually think we'll see a greater move in that direction in the future.
Let me bring it back to you, Jeffrey. Firstly, do you concur with Elizabeth that demand is likely to come from the Gulf region?
Yes, certainly from the Gulf region. Also, I think from Asia, increasing demand. I think one will also see, just in general, the soft commodity sector growing, and we've seen certainly multinational traders and African-based traders well positioned to take advantage of that going forward.
Jeffrey, staying with you, do you believe that the voices that have been calling for a commodities exchange have reason when they say that it can reduce market inefficiencies and bring down transaction costs? Is there validity in those statements?
I think it depends a lot on the commodity, but certainly yes. Transparency of pricing, where a supplier or a producer or certainly a bank has access to price information relevant to a specific commodity for that market, as opposed to using a derived price from a European or North American market, is certainly of benefit. And in addition to that, the ability to hedge the product, so to sell forward or to purchase forward, gives certain comfort to banks and traders. Let's
go over to you, Ravinda, in Nairobi. Of course, when we speak about a commodities exchange, a lot of this hinges on the extent to which the actual agricultural sector is formalized enough to take advantage of a commodities exchange. Can you give us a reflection from your end whether the small-scale farmers and the industry broadly is formalized enough to actually take advantage of such an idea?
Pleasure to be here. We're starting to see an increase in the formalization of the sector. And also we're starting to see a trend of products and services being delivered to the rural small-scale farmer to bring them into the formal sector. There's been an East African exchange in agriculture just opened up in Rwanda, which is starting to get going. Ethiopia, as you know, has a fairly substantial one that has been operational for a while. One of the other interesting trends that I think is going to develop this sector is the increase in infrastructure investment. We're seeing a lot of spend in ports and roads, possibly rail, which will improve access to markets, both for inputs and exports, to allow farmers to get their products to market easier, more efficiently.
Coming back to you, Elizabeth, in London, let's just look at the political side of this conversation. Why have we seen commodity exchanges being seen as such political concepts with such some sort of pushback from governments to take these on?
I think some governments would see them as a means of diminishing their control over sectors that are integral to the economic success and viability of their countries. They're obviously not willing to relinquish that success. You sometimes have concerns from those who are providing the goods and the commodities to contribute to those exchanges in terms of a lack of control. Transparency and legal issues surrounding that obviously become an issue in certain territories as well, perhaps where you don't have such a robust legal infrastructure and perhaps the rule of law is on occasions called into question. But I think the point that was just made about the development of infrastructure is key for the success of East Africa, both in soft commodities and in hard commodities. The region, be it Kenya, Tanzania, Mozambique, has tremendous potential at the moment to develop effective commodities trading across a number of different commodities, and we only have to consider the oil and gas reserves that many of these countries have now to see how vibrant those economies could be in the next 5 to 10 years' time. And developing viable infrastructure, legal and regulatory frameworks to support that is key to the future.
Very quickly, back to you, Ravinda, as we close. What is your sense of the robust and agility of the regulatory frameworks on the ground? Do you think they have the capacity to respond effectively to such an idea?
You know, in recent times, we've seen good discoveries both in gas in Tanzania and Mozambique and oil in Kenya and Uganda. The regulatory environment is one of the challenges that is moving forward to meet the needs. I think in some senses the market has moved a lot faster than the regulatory environment, but I think government has recognized that it needs to move to a point where the regulatory environment is clear to allow the investment to come in to set up the extraction of the resources.
Thank you so much for joining us. Of course, that was Jeffrey Mudzik joining us on giving us his view on trade and finance. Elizabeth Stevens from London giving us her perspective on the risk analysis that is associated there. And joining me here in studio, I had Jeffrey talking to us about his views. Thank you so much for joining this conversation.